The Insider's Guide to Navigating the Maze to Find the Perfect Bank for your SBA 7A loan request. On this episode, we're going to dive deep on how to find the right fit for your SBA loan request. My name is Beau. I'm the host of the Investor Financing Podcast. I've been in commercial lending for over 25 years. First started as a residential mortgage broker, hard money, construction, SBA, owner-user, investment type of real estate financing. I've done pretty much all of it. In this episode, we'll explore how to identify the best lender to work with based on your unique situation. We're going to figure out if the underwriter or the bank, if they'll not overlay the deal, meaning they'll go off of what the SOP for the SBA guidelines state. So let's dive in a little bit deeper now. The first step is understanding the different types of lenders and their underwriting process. There's PLP, which are direct lenders. They can underwrite in-house. Then there's non-delegated lenders that send off the file to the SBA. So you want to know if you're dealing with a direct lender or not. On the other hand, some lenders have additional requirements and they don't go off of the SOP, meaning they're going to overlay it, or maybe they won't do a business acquisition deal with no collateral. So you want to figure out, based on your deal, does that lender have an appetite? And oftentimes that's where the problem arises. Maybe it's a hospitality, it's a motel, and that bank or credit union doesn't like to lend on hospitality. So that's kind of where we step in as commercial mortgage advisors. We, in the SBA loan process, I always tell people we're like the quarterback. We're going to kind of quarterback the deal mostly in the beginning of the process. We're going to help you put together the package. We're going to figure out the strengths and weaknesses of the deal. And then we're going to figure out what bank, credit union, or non-bank SBA partner would be the best. That's where our strength is with our company, Emerge Lending. There's a lot of caveats within SBA. And let me give you some examples. So most lenders, if it's a restaurant business acquisition, for example, if the new buyer doesn't have restaurant experience, a lot of banks will not make that loan because the lack of experience, while other banks will make that loan. So there's a lot of gray areas within the SOP. As we're putting together the package, usually it starts with an initial phone call. You book a call on my calendar link, which is below. And then we kind of deep dive into your loan request. Are you buying just a business? Is it real estate involved? Is it a business with real estate? What type of business? We'll also navigate, does it make sense to do an SBA 7A, or is there real estate involved? Does it make sense to do a 504? What are the pros and cons of a 7A and a 504? So that's kind of like the starting point. And as we dive deeper, we're going to go through and find out. The really big important thing on a business acquisition is getting the seller's tax returns for the past 3 years and a year-to-date interim statement. That really is going to dictate, will the cash flow from the existing business you're buying, will it debt service the new loan proceeds? And so on a business acquisition, we can finance up to 90% of the total project cost. So that could include the purchase price, working capital, first couple months of employee salaries, any FF&E, furniture, fixtures, and equipment, some CapEx sometimes, some improvements to the business, some equipment. That ends up being the total project cost. In that total project cost, you can also take in the SBA guaranteed fee and all the closing fees. That ends up being your total project cost. And SBA guidelines allow for up to 90% of the total project cost to be able to be financed. So when navigating these different banks, credit unions, the important thing is, what's the deal? Maybe you're trying to leverage as much as possible. You're looking for the seller to put 5% on standby as a seller carryback. So you're coming in with 5%, and maybe that 5% is coming from an investor partner. So you're really coming in with zero out of pocket. Some lenders will not like that and won't want to do a deal like that. Some lenders will not do straight business acquisition. So when you're acquiring a business, let's say you're acquiring a painting company, and there's very little collateral, if any, right? There's some equipment worth nothing, depending on the business. So there's what we call a collateral shortfall. Some banks will not do an SBA deal if there's not collateral, meaning the SOP for the SBA says if there's a collateral shortfall, they're going to look for additional collateral. Well, if you don't own any real estate or any other collateral, there's a huge collateral shortfall. Some banks, lenders will not do the deal, while others will do the deal because the SOP says you have to look for additional collateral. And if there's equity, you need to take that equity to collateralize that shortfall. So right there alone, you know that some banks are going to say no way right away. So understanding the caveats of the deal up front is important to figure out what bank or credit union or non-bank SBA lender would be the best, right? Because collateral shortfall is a big thing if it's just business acquisition. Now, if there's real estate involved, is it possible you can do for a longer fixed rate term, you could do a 504, but with the 504, you can't build in working capital. And so sometimes you're looking to get as much leverage as possible. So sometimes you can do a 504 with a companion 7A. So there's lots of ways of structuring these deals. At the end of the day, I'm not trying to toot my own horn, but whether it's me or another commercial mortgage advisor, you should definitely speak to somebody that works with multiple lenders and understands the appetite of each lender, because that's going to save you a lot of time, energy. And at the end of the day, you can go to one bank and that bank declines you when you could have got it done somewhere else. And that's what we help you do. We help you navigate that so you don't get into a deal where, you're 30 days in during your due diligence period and all of a sudden the bank comes back and says, hey, we can't do it. Right? And then you got to cancel the deal. Potentially you're hard at this time. So understanding all the factors that go around SBA lending, understanding that each bank, credit union, and non-bank SBA lender, whether they're a direct lender, if they're not a direct lender, that's very important. Do they like this type of vertical? Whether it's a franchise, have they funded any of these type of franchise deals? Do they like the franchise world of total project cost being financed on a franchise startup? What about a business startup? Right? So the SOP says you need at least a 10% equity injection on a startup. But most banks will say, hey, we'll do startups, but you got to need 15 or 20% of the equity injection coming in, right? So it's all over the place. So what we do at our firm is we help you navigate this process and find the right fit. The best part of it all is we don't charge a fee for this. We get compensated by the lender as a referral fee on these type of SBA deals. So it's a win-win for everybody. The banks, the credit unions, and the non-bank SBA lenders, they get more business because they have, deal sourcers like ourselves bringing them good vetted deals. And then for you, you're getting the best fit possible for your unique loan situation. Advice, not just from one bank. So you say, they tell you one thing and you think that's because it's a startup, you need to put in 15 or 20% in the equity injection. So I'm hoping I'm painting the right picture on navigating the SBA process. And like I said, I'm not trying to, tell you to bring me all your business, but I do think there's a lot of value add to advisors like myself who can help you navigate the process and give you advice. At the end of the day, I'm here. I put out content to hopefully educate you, whether I never talk to you in the future or, you book a call today or in the future. I want to put out content to help you be able to be more successful in your ventures. And as we're getting started or as we've got many projects, right, financing is so important. The leverage you can get, learning how to structure deals with low to no money out of pocket, right? That's very important. On the SBA 7A, you can get this 5% seller carryback. You come in with 5%. That money could be a gift. That money can come from investors, right? So you can structure no money down deals. Like some of these gurus online say, you can do these deals. They happen all the time. There's investment groups that actually will put up equity in these type of business acquisitions. So there's a lot of interesting things out there. And right now, with the amount of baby boomers that own small businesses that are retiring, it's a really, really good time to be looking for these deals, to be, not just so much from the business brokers, right? There's business brokers that list these properties on the online portals. Bootstrapping and finding off-market deals is also a great way to source these. And that could be word of mouth. That could be a business that you work with. Maybe they do your landscape or they do your tree trimming service or their HVAC company. At some point, these business owners need to sell because they want to retire. So getting in on those deals before they hit the market is very good. Just like in real estate investing, right? If we're able to find these off-market deals, that's where a lot of the opportunity comes from. So anyways, hope you enjoyed this episode. Do me a favor, subscribe to the channel, share it with colleagues. I'm trying to bring valuable content. We do interviews with industry professionals. We bring in my colleague on franchising. She talks about new emerging concepts in the franchise world. You can watch previous episodes. We do live events online. Feel free to reach out and book a call. Love to discuss your unique situations and see how we can work together. Thank you so much for joining us on another episode of the Investor Financing Podcast. Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.